You did not have an accident. You did not get a ticket. Your driving record is clean. And yet you opened your renewal notice and your car insurance went up anyway. It happens to millions of Americans every year, and most of them have no idea why. They just pay the higher premium and move on, assuming there is nothing they can do about it. In this video, we are going to break down exactly why car insurance rates go up even when you have done nothing wrong, what factors are driving the increases most people are seeing right now, and what you can actually do to bring your rate back down. Let's start with the factors that have nothing to do with you personally. Insurance companies don't just price your policy based on your individual driving record. They price it based on overall risk in your area and across their entire book of business. When costs go up across the industry, your rate goes up even if you are a perfect driver. The cost of repairing vehicles has increased dramatically. Modern cars are loaded with sensors and cameras that make even minor fender benders expensive to fix. A bumper that used to cost $500 to repair now costs $2,000 or more. Insurance companies pay those bills and pass the cost on to every policyholder. Medical costs have risen significantly. When someone is injured in an accident, insurers pay medical bills. As healthcare costs rise, so do claim payouts, and those costs get distributed through higher premiums across all policyholders. Weather-related claims have surged. Hailstorms, floods, and severe weather events have become more frequent and more costly. If you live in an area that has seen more severe weather, your rates reflect that increased risk, even if your own car has never been touched. Auto theft rates have risen sharply in many parts of the country. More stolen vehicles mean more claims, which drives up rates for everyone in affected zip codes. Now, let's talk about factors specific to you that can cause your rate to increase. A new claim on your record is the most obvious one. Even a minor at-fault accident can raise your premium significantly at renewal. A traffic violation hits your rate hard. Speeding tickets, running red lights, and especially DU is all signal higher risk to your insurer. A single speeding ticket can raise your premium 10 to 25%, depending on your insurer and your state. Your credit score affects your rate in most states. Insurers use credit-based insurance scores as a predictor of claims risk. If your credit score dropped since your last renewal, your premium may have gone up as a result. Adding a young driver to your policy is one of the biggest rate increases you can trigger. Teenage drivers are statistically the highest risk group on the road, and insurers price that aggressively. Moving to a new zip code changes your rate immediately. Higher traffic density, higher theft rates, or more severe weather in your new area all affect your premium. Now let's talk about what you can actually do about it. Shop your rate every year. Loyalty to one insurance company rarely pays off. Rates vary significantly between insurers for the exact same coverage. Getting 3 to 5 quotes at renewal takes about 30 minutes and can save you hundreds of dollars per year. Raise your deductible. If you have enough savings to cover a higher out-of-pocket cost, raising your deductible from $500 to $1,000 can reduce your premium meaningfully. Ask about discounts you might be missing. Safe driver discounts, bundling home and auto, low mileage discounts, paperless billing, and paying your annual premium up front all reduce your rate. Many people are leaving discounts on the table simply because they never asked. Improve your credit score. In states where credit-based pricing is allowed, improving your score over time will gradually reduce your insurance costs. Take a defensive driving course. Many insurers offer a discount for completing an approved course. It takes a few hours and can knock several % off your premium. Car insurance rate increases are often not your fault, but they are not something you just have to accept either. Shop your rate, ask about discounts, and make sure you are not overpaying for coverage you don't need. This video is for educational purposes only and does not constitute legal, financial, or professional advice. Always consult a qualified professional before making any decisions. If this helped you, subscribe. We cover insurance and financial topics in plain English every week. No jargon, no sales pitch, just the facts.